Hello viewers, welcome to my channel. I'm Hasham. Now we'll start the problems on budgets and budgetary control. So last video I have uploaded on the introduction theory of budget. In that video I have explained you in detail regarding the meaning of the term budget, definition of budget, budgeting and budgetary control, objectives of budgetary control, essentials of budgetary control, advantages, limitations and classification of budgets. All these things I have explained you in detail. So my suggestion to the viewers, to my students, please watch carefully that video, because without understanding the meaning you should not directly go to the problem. The problems are based on the introduction, theoretical part. So my suggestion, please watch the video completely, introduction video. If you have not watched, I go to the playlist of my channel, select the subject Managerial Accounting. In that, select the topic budget and budgetary control. Watch the complete video, then we'll start the problems. So before starting the problems, I expect my viewers to have a printout of the problems which I have given in the link under my description. So go to the link, take a printout and keep it ready before starting the problems. Without problems, you cannot be able to understand the solution and explanation. And one more thing, if you are on my channel, I suggest you to visit the playlist. I have uploaded the videos on so many subjects like financial accounting, advanced accounting, cost accounting, corporate accounting, business statistics, income tax, financial management, investment management. So many videos I have uploaded. Select the subject, select the topic, watch the video. Definitely you will get a lot of knowledge from these videos. Now I am reading out the first problem on budget and budgetary control. The HP Limited manufactures two brands A and B. Gives the following particulars. The sales department of the company has three departments in different areas of the country. So three different departments the company is selling two products A and B. The sales budget for the year ending 31st December 1992 were A product, the sales in department 1, 2, 3 are 6 lakh units, 11 lakh 25,000 units and 3 lakh 60,000 units. These are the expected sales, budgeted sales in the three departments of product A. Then product B, the three departments, department 1, 2, 3, sales are 8 lakh units, 12 lakh units, 40,000 units. So we are given two products A and B. Each product is sold in three departments 1, 2, 3. Then B product department 1, 2, 3 and budgeted sales are given in each of the department. Sale price 3 rupees and 4 rupees in all departments. Actually in the problem it is there is a misprint. 3,000, 4,000 is given. Remove the 3 zeros. It is actually 3 rupees and 4 rupees. This is the selling price per unit. It is estimated that with rigorous sales promotion, the sale of B in department 1, the sale of B product in department 1 will increase by 3,50,000. Actually, before this, already we have decided how much is the sales in department 1 B product. It is 8 lakh. So according to sales budget, 8 lakh units is the sale in department 1 product B. But in adjustment it is saying that it is estimated with rigorous sales promotion, the sales of B product in department 1 will increase by 3,50,000. So earlier it was 8 lakh. Now will increase. In working note you can see here, department 1 product B, department 1 product B, the actual budgeted sales are 8 lakh units. In adjustment it is saying that by making more sales promotion efforts, the sales will increase by 3,50,000. So we add up 8 lakh plus 3,50,000, 11,50,000 units is the sale of B product in department 1. Next items adjustment it is given. It is also expected that by increasing production, arranging extensive advertisement, department 3 will be able to increase the sales of B to 1 lakh. Department 3 of product B, it will increase to 1 lakh. Actually, how much is the department 3 B product? 40,000. In the original sales budget, the expected sales are 40,000. But in adjustment it is saying that by increasing the sales promotion effort, by extending the production, we can be able to increase the sales to 1 lakh units. So here you can say department 3, product B. The new sales will be 1 lakh units. Originally 40,000 given. Now we'll not take 40,000, we'll take the new sales. Similarly, it is recognized that the estimated sales of department 2 represents an unsatisfactory target. It is agreed to increase both estimates by 20%. That means department 2 for both the products, sales are not satisfactory. Now it is asking you to increase the sales by 20% in department 2 for both products. In first department, A product, for A product department 2 are 11,25,000. Originally given 11,25,000. To 11,25,000 we add up 20%. So department 2, product A 11,25,000 plus 20%. The new sales will be 13,50,000. For which product? A product, department 2. For product B, for product B, department 2 it is given 12 lakh. Product B, department 2, 12 lakh. Now we'll increase 12 lakh plus 20%, 14,40,000 is the units. Now, prepare sales budget for the year ended 31st December 1982. We are required to make the sales budget. So sales budget will classify the different product sales according to different departments. So here, sales budget for the year ending 31st December 1992. First column I have taken the departments. Departments are 1, 2, 3 departments. Then 2 broad columns I have opened for A product and B product. A product 1 broad column, B product 1 broad column. In this A product 3 sub columns. The sub columns are quantity, selling price and value. Quantity, selling price and value. For B product also quantity, selling price, value. Last column will be total. That's it. Now we'll take the quantity. The quantities are given in the problem. For first A product first department 6 lakh. So thousands omitted. I'll write down here. Thousands omitted. I'm not taking 3 zeros because the column size will increase. Unnecessary more value, large value I have to take. So I have removed 3 zeros. So instead of 6 lakh units given, 3 zeros I have ignored. So I have taken 600. Instead of 6 lakh, I have taken 600. Secondly, 13. Second department it is given 11,25,000. But second department sales are unsatisfactory. Here we have taken. Second department for product A, it is 1350. So here I have taken 1350. For third department it is given 3,60,000. So I have taken 360. 3 zeros I have ignored. Now selling price per unit of A product 3 rupees. Multiply 600 into 3, 1800. 1350 into 3, 4050. 360 into 3, 1080. Take the total. Exactly similar we have to perform for B product. B product first department. B product department 1 8 lakh. So I have taken 8 lakh. Where is that 8 lakh? Department 1 product B. It is 8 lakh. Here it is. Department 1 product B. Originally 8 lakh units are there, but in the adjustment it is given that we have to increase it by 3,50,000. We have to increase it by 3,50,000. So 8 lakh plus 3,50,000, 11,50,000. 3 zeros ignore, 1150. Right? So second department. In second department B product, already in adjustment I have shown. Second department B product 12 lakh plus 20%, 14,40,000. 1440. And third department it is given as 40,000. But in adjustment it is given that for third department for product B, the new sales are 1 lakh. The new sales are 1 lakh to 100. 3 zeros ignored, so 100. So these are the quantity for B product. Selling price per unit 4 rupees. Multiply these two, quantity into selling price, will get the value. Now total sales. Total sales ka matlab the sales of A plus sales of B. What is the total of sales of A? 1800. Sales of B product 4600. 1800 plus 4600, you will get 6400. Similarly 4050 plus 5760, 9810. 1080 plus 400, 1480. Take the total sales 17,690. 3 zeros are omitted. 3 zeros are omitted. So 17,690 is the total sales for A product and B product in all the three departments. In all the three departments, both the products, total sales are 17,690. Whereas individually, the total of A sales, A product total sales are 6,930. B product total sales are 10,760. Similarly, the sales in department 1, the total sales of department 1 are 6,400. Total sales of department 2 are 9,810. Total sales of department 3 are 1,480. That's all. This is the complete solution of problem number 1. Now, second problem. Chandram Brothers sells 2 products which are manufactured in one plant. During the year 1982, it plans to sell the following quantities of each product. Sales estimates in units, budgeted sales, expected sales. The first quarter, second quarter, third quarter, fourth quarter total. Product 1, product 2. So 2 products are given, 1, 2. The number of units. First product, first quarter 90,000 units. 2,30,000 units, 3,80,000, total is 7 lakh units for the product 1. For product 2, 85,000, 75, 55, 85, 3 lakh units. Each of these 2 products is sold on seasonal basis. Product 1 tends to sell better in summer months, while product 2 sells better in winter months. This is just an information. We are not concerned with in calculations. We won't consider this. Chandram Brothers plan to sell product 1 throughout the year at 10 rupees and product 2 at 20 rupees per unit. Selling price per unit of product 1 is 10 rupees and selling price of product 2 is 20 rupees per unit. A study of past experience reveals Chandram Brothers have lost about 3% of the total of its billed revenue because of returns, constituting 2% loss of revenue, allowances and bad debts 1% loss. So it is given the company will lose 3% of total billed sale amount. Total bill amount 3% will be lost. How it is lost? 2% on account of sales return. When we sell the goods to the customer have returned back the goods, sales return. So 2% will be lost. Revenue will be lost on account of returns and 1% will be lost on account of allowances and bad debts. So 3% total revenue will be lost. Now we are required to prepare a budget incorporating the above information. Whatever information is given, we have to prepare a budget, sales budget. So here you can see sales budget. Period, quarter, first quarter, second quarter, third quarter, fourth quarter, 4 quarters. Now product 1, sales of product 1. Actually this is the sales of product 1 at the rate of 10 rupees per unit. At the rate of 10 rupees per unit for product 1. It is given in the problem. Now we multiply 10 rupees into number of units. See the problem. In first quarter 90,000 units are given. In the first quarter sales are given 90,000 units. So 90,000 into 10, 9 lakh. Similarly, second quarter 2,30,000. 2,30,000 into 10, 23 lakh. Third quarter sales are given 3 lakh. 3 lakh into 10, 30 lakh. Fourth quarter 80,000 units. So 80,000 into 10, 8 lakh. The total sales of product 1 are 70 lakhs. First product over, A product over. Now B product, second product. Second product, the selling price is given in the problem 20 rupees per unit. 20 rupees per unit. Number of units are given second quarter 85,000. 85,000 into 20, you will get 17 lakh. Second quarter 75,000. 75,000 into 20, 15 lakh. Third quarter is 55,000. 55,000 into 20, 11 lakh. Last quarter 85,000. 85,000 into 20, 17 lakh. The total sales of second product 60 lakh. 60 lakh. Now we add up total sales of product 1, product 2. So add up 9 lakh plus 17 lakh, 26. 23 plus 15, 38. 30 plus 11, 41. 80 plus 170, 250. Now if you add up the total sales, it will be 1 crore 30 lakh. Or you add up 70 plus 60. 70 lakh plus 60 lakh, 1 crore 30 lakh. or individually you add it vertically, 1 crore 30 lakh is the total sales of both the products, product 1, product 2, in 4 quarters, right? Now I am extending the table. I don't have sufficient space in taking on all in one table. All the columns I cannot accommodate in one table. That's why I have prepared 2 tables. First table I have calculated total sales, and second table I am deducting the return, sales return and allowances. The quarter period, quarter 1, 2, 3, 4, total sales just now I have calculated. From here I have taken this total sales. Now 2% loss on account of returns, it is given in the problem. Totally 3% are lost. In this 3%, 2% are returns and 1% bad debts. So 2% of total sales, 2% of 26 lakh 52,000, 2% of 38 lakh 76,000. Like this 2% returns. The total returns are 2 lakh 60,000. Similarly, balance, deduct it. From total sales, deduct the returns. The net sales, 25 lakh 48,000. 26 lakh minus 52,000, 25 lakh 48,000, 38 lakh minus 76,000, 37 lakh 24,000. These are the net sales after deducting sales returns. From this net sales, we deduct the allowances of 1%, bad debts and allowances 1%. So 1% bad debts. 1% bad debts on the total sales, not on the net sales. Not on the net sales, total sales. So total sales 26 lakh 1%, 26,000. 38 lakh 1%, 38,000. So 1% on total sales we have calculated as bad debts. Now subtract net sales. These are the net sales minus bad debts. Net sales minus bad debts. We'll get the here net sales. Here net sales are after deducting 25 lakh 48,000 minus 26,000, 25 lakh 22,000, 37 lakh 24,000 minus 38,000, 36 lakh 86,000. The total net sales are 1 crore 26 lakh 10,000. 1 crore 26 lakh 10,000 is the total of net sales. That's all. This is the sales budget, problem number 2. Now these 2 problems, first problem, second problem is on sales budget. Now third problem is on production budget. See, all the budgets depend on sales budget. First, after making sales budget, we have to prepare the production budget. So from the following particulars, prepare the production budget of Arun Sales Corporation for the year ended 30th June 1987. Products are ABC. 3 products are given. Sales in units. Sales as per sales budget. So already sales budget was prepared and we have estimated how much are the sales for 3 products A, B, C. How many units? So sales in units are given 1,50,000 units for A product. B product 1 lakh, C product 70,000. These are the number of units expected to be sold for ABC. Now estimated stock in units. On July 1st, 1986, on 30th June 1987. Actually, we are making the budget for the year ended 30th June 1987. So, year end on 30th June 1987. So, year will begin from 1st July 1986. So, here 1st July 1986 is the opening stock and 30th June 1987 is the closing stock. So we are given 3 things. First, budgeted sales. Second, opening stock in units. Third, closing stock in units. With the help of this, we have to find out budgeted production. Right? So before making budgeted production, you remember the formula. What is the formula for budgeted production? See here. Budgeted production in units. Actually, production budget is a quantitative budget. Here we have prepared as this one, monetary budget, financial budget. This is a monetary budget. Here we are making a quantitative budget. Budget in terms of units, not in value, not in rupees. So budgeted production in units is equal to budgeted sales in units plus closing stock in units minus opening stock in units. So remember, whenever we are required to make production budget, immediately remember the formula. The production depends on sales. If I'm having a business, I will produce only that much quantity which can be sold in the market. So before producing the goods, I will make a survey in the market and find out how many units I can be able to sell. Suppose if I can be able to sell 1000 units, budgeted sales are 1000 units, I will make 1000 units. If I expect that market sales will be 2000, so I will make 2000. The production depends on sales. But apart from production, I will keep some closing stock. I will not make exactly equal to budgeted sales. Suppose if I make a survey and found that the market sales will be 10,000 units, so I will not make exactly 10,000. I will make a little bit more than 10,000. Even if it is not sold, I will keep it in stock. I will keep it in stock. So market sales expected 10,000 units, but I will make 12,000 units. 2,000 extra units I will make for closing stock. Suppose all of a sudden market may increase हो गया, demand increase हो गया, तो I must have sufficient goods to sell the increased demand, right? So closing stock will be added. Opening stock, already at the beginning I am having some goods. Already in the beginning of the year I am having some goods. Opening stock, that will be deducted to find out the production. The production budget or budgeted production in units is equal to budgeted sales in units plus closing stock in units minus opening stock in units. This formula you have to remember. Now I'll present the budget. See here, budgeted production budget for the year ended 30th June 1987. This is the heading. First column, three columns. Three columns I'll make at the extreme right hand side. Extreme right hand side, three columns, A, B, C. A product, B product, C product. Now sales in units are given in the problem. It is given in the problem, sales in units, A product 1,50,000, 1,70,000, 1,50,000, 1,70,000. Sales, estimated sales. To this we have to add closing stock. Add the closing stock. Add closing stock. Closing stocks are given 15,000, 4,500, 8,000. 15,000, 4,500, 8,000. Add up. 165, 104, 500, 17. Minus opening stock. Opening stocks are given 14,508. 14,000, 5,000, 8,000. Subtract. The budgeted production in units are for A product 1,51,000 units. For B product 99,500 units. For C product 70,000 units. That's all. I have explained you in detail. Two problems were on sales budget. One problem is on production budget. Right? So totally 3 problems I have completed.